Hello, and welcome to Brand Clarity by Visions to Images, where we focus on strategy and business development for entrepreneurs at all different levels through branding and digital marketing techniques. Susie Liberatore is the founder and art director of Visions to Images Creative Services, LLC. For the last decade, she has personally been instrumental in bridging gaps between the global digital market and neighborhood locations for some of the biggest brands around. Growth is possible for even a single location with the right professional branding techniques and Susie's signature strategies of Visions to Images. Stand out from your competitors and bring your visions to life while watching your sales skyrocket. Your host for this is Susie Liberatore, owner of Visions to Images. Hello, everybody. Today on the podcast, I have Tim Bratz. He is the owner of Legacy Wealth Holdings. It's a real estate investment company. And I'm super excited to have him on. I've been following him on social media, and we have a lot of common people that we know and are connected to. So I'm excited for him to talk about investing. Welcome.
I appreciate you having me. Thanks for having me, Susie.
Absolutely. So tell me how you got started in all of this fun stuff. Give us a little bit of background.
Yeah. So I know that your audience is heavy entrepreneurs, not just real estate entrepreneurs. I think I got bit by that bug early on. My dad had a full-time job. I'm sure you've heard of like Rich Dad, Poor Dad, right? My dad kind of lived like Rich Dad, but taught me like Poor Dad. Like he had a full-time job as a police officer, and then he had this part-time business that made 2 to 3 times as much money as his full-time job did. And he never let go of his full-time job. And so I was at least aware enough of that in high school where I was like, I know you're telling me to go get good grades and get a good job, but you're making all your money from this business over here. You're not even working it part-time, or it's only part-time. I always knew I wanted to be an entrepreneur. I didn't like people telling me what to do. I didn't like going to work for somebody else. So, I hustled. I think a lot of entrepreneurs they figured that we hustled something, right? So I was hustling haircuts and mixed CDs and all sorts of stuff in high school. And then in college, I had a painting business, worked for a financial advisor as an intern, kind of understood the finance side of things. Then I got an internship with a real estate company, one of the largest home builders in the country. And this is 03 to 07 when everybody's making money in real estate. I was like, I like that. That's what motivated a 20-year-old kid. And I'm from Cleveland, Ohio, and moved out to New York City after I graduated college in 07. And I thought you got involved in real estate by becoming a real estate agent. So I got my real estate license. And for some reason, I parked it with a commercial brokerage instead of like a residential brokerage. And we brokered leases on office and retail spaces in Manhattan. And so it was just, I got the bottom of the barrel leads and just dumpy listings. It took me about 8 or 9 months to close my first deal. And even with like a dumpy bottom of the barrel listing, we signed a lease on a 400 square foot space in Manhattan, 12-year lease term at $10,000 a month for 400 square feet.
Wow.
And I remember doing the math on that. And I was like, with all the escalations and everything else, the landlord was going to make almost $2 million on this doing something one time. I understood residual income and passive income. And that was one small retail space, not including the other 7 that he had and like 10 stories of apartments above it. And so I quickly realized I needed to be owning real estate, not brokering real estate. And so I moved down to Charleston, South Carolina, decided I want to become a real estate investor. I did a lot of studying, and I did a lot of like buying the courses and, watching the gurus and learning as much as I possibly could. I was ready to go and buy something. And that's when the total bottom fell out of the real estate market. It was end of 2008. It was kind of cool though, because I didn't buy anything yet, and everything started coming on the market. All these deals started flooding the market that were just pennies on the dollar. And so I bought a dumpy little duplex in the hood, 14 grand on my credit card because I couldn't get anybody to lend me money. I was 23 years old at the time. Just fix it all up, put it back on the market, and sold it to one of the neighbors for $33,000. And I made like 13 or 14 grand after all costs were considered with renovations and everything. Realized like I just made money doing this in the worst housing economy ever. And it's my first deal and I don't know what the heck I'm doing, So I was like, let's go do it again. So I just did it again and kind of built up a small portfolio, and then got into my first apartment building in 2012. Moved back to Cleveland, Ohio, actually in 2012. Bought my first apartment over on West 130th Street in Cleveland.
Yeah.
And it was just, I love the scale of it. Everything that could come with going to one location to collect rent instead of 10 locations, or going to one location to meet a contractor instead of 10 locations, or inspecting one roof instead of 10 roofs. So there's just a lot of scale in doing the commercial and the multifamily and the apartment side of things. And that's when I really just put my head down and started focusing on that. There's been a lot of ups and downs, a lot of good partnerships and bad partnerships, a lot of that kind of stuff that's happened. But if you fast forward to today, I own a little over 4,500 apartments, a little over $400 million real estate portfolio. We're across 12 different states. I'm kind of bigger than the small guys, but I'm not quite like a hedge fund or a real estate trust. So I get a lot of attention from a lot of real estate investors who are trying to scale and get in a buy and hold type of assets like this. So that turned into a consulting business. And so that's what we do. We do a little bit of consulting, but a lot of real estate investment and just kind of buying stuff for our own portfolio.
Yeah, I love your story. I mean, I love seeing you and showing up on social media and sharing all of that stuff. It's so inspiring. And, everybody starts somewhere, and it's good that you kind of found your sweet spot and you're able to help others with that. Obviously, that's why we have some people in common, because they are doing that passive stuff. And it's always interesting to hear that, because whenever I thought of real estate or real estate investing, I'm like, oh, you need a ton of money. Oh, you need this. It's complicated, all these things. But it seems like it's not easy, but it's pretty.
I would say it's simple, right?
Okay.
It's simple from a conceptual standpoint. It's more simple than you might think, especially commercial real estate. Everybody builds it up to be this thing that's so complex. I need to go to an Ivy League school, or I need to go have a family and have like this legacy passed down to me because my great-great-grandpa was in real estate. And that's not the case. I'm a blue-collar kid from Cleveland, Ohio. My dad was a cop. My mom was a stay-at-home mom with a teaching degree. And that's how I was raised, right? And so, I went to school for marketing, and then I just kind of worked my way through the ranks. I was pretty bad at real estate for the first 7 or 8 years. And then I finally got good maybe about 4 or 5 years ago. And so I'll say this though, is like a lot of entrepreneurs, getting into different businesses. I knew that real estate wasn't an experiment, right? Like I knew it worked. We've all seen a bunch of people in real estate who've made a ton of money. You've heard the statistics that like more millionaires and billionaires are made in real estate than any other industry combined. And all those people who make money in other industries end up usually putting their money in real estate to preserve their wealth. And so I knew that it wasn't an experiment. I knew if I just put my head down, I knew I'd get, punched in the gut over and over and over again. And I definitely did.
Yeah.
By tenants, by contractors, by private money lenders, by banks, by business partners. And, but I just kept my head down. I realized that eventually it would work. Eventually it was just a timing type thing. And so that's kind of what got me to where I am. I didn't have like a backup plan, right? Like I didn't have some sort of ships to retreat to. Like my ships were burned. The only thing I've ever known is real estate. So it's like, I got to make it work.
For sure. And I think that's a lot when you're a business owner, you just say, I have to make it work. What do I need to change? What do I need to adjust? Like it's that mind shift, right? Like we need to hustle. We need to do this. I mean, it's like, okay, let's look at the money that we're making. How can we get this going? We need to hustle. We need to figure out what to do. Yeah. And I don't always necessarily like the word hustle, but I feel like it's okay to use in this instance because we know to do it. We know that we have our goals and we have to make them in any business. The interesting part about what you said was having the contractors and having all of these people lined up. Yeah. I feel like that's the biggest thing that I have in my mind. Oh, I'm going to hire a bad contractor. Oh, what if all this goes south? Like all of these little things, like these mindset shifts are so crazy when you think about the real estate investment. Have you ever ran into that?
Yeah, absolutely. And I've had many, many years of doing high volume for a long time of getting punched in the gut, right? And messing up over and over and over again. It's one of those things like, I started with a single family house, right? And I YouTubed and I Googled, how do I change out carpet? How do I change out light fixtures? And I started doing some of those things. And I went and collected rent. And then all of a sudden you hang out in circles of other entrepreneurs and other real estate investors. You start learning about, hey, you can use this management company, or you can meet this contractor because they're solid, or you can get this software that helps you collect rent virtually and online through ACH payments instead of having to go and actually knock on the door and collect cash. You get a little bit better, and a little bit more refined, and a little bit sharper over and over and over again. And eventually you mess up as many times as I have, right? And you it's hard to pull the wool over my eyes. Like I've messed it all up. I've done all of it before. And fortunately it happened on mostly smaller deals and mid-sized deals, to the point where now we have ridiculous systems, ridiculous processes, standard operating procedures for everything, checklists for everything, where you can't mess it up, right? We have all the different systems and the right people in place. And even when we hire somebody new, we just plug them into the system, and it's very systematic, right? And so it took a long time and a lot of mess ups in order to understand what the best systems and processes and procedures were for running real estate. But I was able to stick through it. And, it's not about, how hard you're hit. It's about how hard you can get hit and keep moving forward, right? That's what Rocky said. So
Yeah, no, I agree. So many times, yeah. I mean, it's a risk in entrepreneurship. Like we have to get hit, we have to fail, so to speak, and then come back up. A lot of times when people fail or something goes wrong, they feel like, well, I'm just going to give up. And that's not the case for some people like us, And it's like, if you want to make it, you have to keep going. You have to learn. I mean, when I started off my business, I definitely learned a lot too, but in a different sense of view because mine's different. But I mean, there were times when I failed. There were times when I undercharged. There were times when, what am I doing? Who am I servicing? All these things, like figuring out everything and then putting in systems into places so that someone can edit my podcast. Someone can do this. Someone can do that. So I don't have to do everything because there's no way. That is so important. Hey, let's stop for just 1 second during this podcast episode. I know you're so excited to get back and listen. But I wanted to chat with you and talk about how we really work with businesses. What we really do is we dive in and we ask so many questions. We go through a series of questionnaires and extensive research to really help you get a clear, identifiable plan of action that needs to happen for your business. If you want to hear more about this, go to visions2images.com, click the contact us button, and we will be happy to set up a time to chat more.
I got a question for you.
Go for it.
What do you think the difference is between sticking through it and just pushing forward through all the pain and difficulty and failure and struggle versus being like, all right, now it's time to cut bait because this business isn't working?
What do I think is the difference?
Or like, when do you realize like, oh, this is, I started a restaurant and then COVID hits and I can't continue my restaurant because I don't have the cash or whatever. All right, it's time to cut bait and make sure I minimize my losses versus moving forward.
So in my instance, when I was going through a divorce, I had my business started, but it was like very minimal. It was very okay, all that stuff. So what I knew, like I always wanted to be a business owner. I always wanted entrepreneurship. And when I finalized the divorce, I was like, this is it. Like, I'm a single mom. How am I going to pay my bills? How am I going to do all of these things? I hired a sales coach. I started investing in my business and knowing what I needed, knowing that I failed. It's still failing with my sales coach sometimes. Like sometimes I'm in my own head, but you have to be able to push through. So when I went through that turning point in my life, that's when I was like, I'm going to do this. Like I pulled up and I was like going head into my business and was saying, I'm not going to give up. This is what I built for these years, even though it's not where it needs to be. But that's why I'm investing to get to where it needs to be. So I feel like with others, I mean, it's one of those things. If you want it, you have to do it. If you've invested that much time and energy and money already into it, don't stop,
Mm-hmm.
So that's my answer.
I think putting yourself in the right rooms and investing in yourself first, investing in your business second, and then you start looking for other investments. I know, and there's a lot of people kids who hit me up on, because I'm active on TikTok and Instagram. And so I get these young guys and girls and they hit me up and say, hey, I have $20,000 saved up and I'm 21 years old. I was like, first of all, it's amazing, right? Like it took me a long time to save up $20,000. And they're like, should I go and buy this duplex? Or should I go and buy a house? Or should I buy this rental property? My answer to them is like, if you spend that money's gone, right? Now it's sunk in that deal and you have that deal and you're going to learn from that deal. But like, to me, if I'm giving my 20-year-old self advice, I would say, go and spend that money on education, on investing in myself, because that's something you can never take away. And it's going to compound, and being in the right rooms and being in, meetup groups and being in mastermind groups and surrounding yourself with the right people who can teach you, because otherwise you need to go buy that house, put down $20,000, and then you have to go save $20,000 again in order to go buy another house versus putting yourself in the right rooms. So the difference is if you go put yourself in the right room and you go and meet people who can teach you how to go out and raise private money, how to source capital from other people, right? Because there's other people probably listening to this podcast who are like, I want to invest in real estate, but I don't have the time, I don't have the bandwidth, I don't have the knowledge, I don't have the experience, but I want to invest in real estate. Well, guess what? And they don't like their money in the stock market because they think it's too volatile, they think it's too speculative, and they want something that's a tangible fixed asset that has tax benefits and advantages. Guess what? There's a value that we can bring to go out to those individuals, and you can raise outside capital. You can raise private money to go and invest in deals yourself. So whenever, a 20-year-old kid tells me that they have a bunch of money saved up and they want to go out and buy a property, I'm like, invest in yourself, invest in your own network, invest in your own community and resources, because you'll go and learn how to go and raise $20,000 100 times over if you go and invest it in yourself. So I think that's the best advice that I can give somebody who's just getting started.
Yeah, I invested in the sales coach and the mastermind, no brainer. And at
Mhm.
first it was like one of those things where I was like, oh, this is money. But honestly, like I'm still to this day, 3 years later with her and all that stuff. So it's been one of those things where each week it's always different. There's always different stuff happening. It's so exciting and it's so different. And my question was to you, what would be your best advice? And I guess that's your best advice for somebody. So that
Well, I think the thing is like, we see it as an expense or initially, right? We're like, oh, this is an
exactly
expense. I got to hire a sales coach. I'm going to lose money. I could take this money and put it somewhere else.
right.
And when you realize that it's an investment
Yes.
and you realize that investment yields a return and it is the best return. Oh, I could go and put this in Bitcoin. You're not going to get the kind of return that you can get if you invest it in yourself, right? You're not going to get the same return if you invest even in a real estate property as if you invest it in yourself. So like early on, I was just obsessive of paying for coaches, joining masterminds,
Absolutely.
reading the right books, listening to the right audio books, and doing
Well, a
a lot
lot of it,
of
yes, a lot of it has to do with mindset eventually too. Like there comes a
totally.
time. I mean, I remember back my sales coach always tells me, she's like, there was a time when you thought you could do it all and you didn't want to hire people. And now it's like changed because I can't do it all. I hire people. And there was another time where I wouldn't charge what I was worth. And now I'm just like, this is my price. These are what I offer,
Mhm.
all those things. So it's like you have to go through that mindset shift in order to grow and succeed.
For sure.
Awesome. Well, do you have anything else? I think we talked about a lot of different topics on here today.
I guess because you have an audience of, or not investors, of
Entrepreneur.
entrepreneurs who might be interested in passively investing in real estate with how hot the market is right now and everything that's going on, a lot of people are interested in real estate. And I just want to give a couple like kind of forewarnings or I don't know, just some advice on if you're going to invest passively. I buy and I buy distressed apartment buildings. I buy properties that are either physically distressed or managerially distressed. I typically buy from one of two types of people. One is like mom and pop, owned it for 40 years, never reinvested anything back in the property, and just it's falling apart and they don't have the bandwidth, the time, they just don't want to deal with it. They just want to sell it and dump it, right? And so that's one of the people that I buy a lot of my apartments from. The other people that I buy a lot of apartments from are really sharp entrepreneurs, people who make millions of dollars a year in their traditional business, and they're making so much money they think, oh, I drive by apartments every day. I used to live in an apartment when I was first out of college or whatever. Let me just go buy an apartment building. And they go and buy something and they don't realize it's a new business. That's like you and me, Susie, going and having a beer and being like, you know what? We should open a restaurant. We should open a bar, right? Like, guess what? It's a little bit different drinking at a bar versus owning a bar and a restaurant, right? And operating it. It's two totally different things. So there's this ideology that real estate's passive. It's only passive. It's not really passive. It's residual first. You do it once, you get paid on it over and over again, but there still takes active work.
Right.
And then eventually you can layer it with passive management and build out a big team, but it's not really passive. And I think a lot of entrepreneurs jump into real estate as a part-time thing, not realizing how much attention it actually needs, and then all of a sudden they're forced with a decision of, do I lose my business because I'm spending so much time on this real estate and going through the learning curves over here, or do I just drop the real estate and go back to my business? And so I see that a lot. I bought thousands of doors, apartment units from sharp entrepreneurs, people who make millions of dollars a year, and they just didn't have the right team, the right process, the right partner, the right management company. They didn't understand what that looks like. So if you're looking to go invest in real estate, I would absolutely link arms with somebody who knows what they're doing, right? Don't try to jump into it on your own. I would either joint venture with somebody who is an active operator where maybe you can bring some capital, maybe you can bring some resources, some connections in that regard, and work with somebody who can work on a full-time basis on your real estate holdings, or I would passively invest. And there's a couple of ways to passively invest. You can just lend somebody money who's going to go out and flip houses and say, hey, pay me 10% a year, 12% a year, 15% a year on my money. You can earn a great return from somebody else who's flipping properties. They got to know what they're doing, though. Make sure it's somebody who's got some experience.
Agreed. Yeah, there's a lot of things there.
Or you can invest as an equity investor into an apartment building or a commercial property or something like that, where you actually have some ownership, where you can earn a fixed return. Maybe it's 8%.
Right.
Then you have some equity in that deal forever. And as you have cash flow and as you have sales proceeds and as you have depreciation, you can capitalize on a lot of that stuff. So I would look at one of those avenues instead of jumping in, unless you're going to jump in with both feet 100%, then maybe it can make sense. But if you're trying to do it on a passive basis, I would definitely get started with a joint venture or a lending situation first. If you guys got questions, hit me up on social media. I'm happy to answer any questions or make some introductions, point you in the right direction.
Yeah, I think there would be a lot of questions, and I'm excited to actually hear you speak on Monday because I've thought about it so many times, but it's all of those things that you're saying. And I mean, I have my business full time. I have another thing that I'm invested in, and there's just a lot of things. And it's like, how much can you really take on? Like you're saying, like I have my full time one. Would I passively invest? Like all of these questions. Do I want to do it? I don't know. It's always been in the back of my mind because I know I hear from everybody and I know the benefits to it. So
yep.
I'm excited to actually hear that. And I'm excited that you got to chat with me today because it's kind of eye-opening and I see you all across social media again. So it was fun. Do you have anything else?
Oh, I appreciate you having me. Thanks for doing what you do and creating so much value for other people and other entrepreneurs. And it's stuff like this that is pouring good stuff into our head.
Absolutely.
Double down on this kind of stuff. So no, I appreciate you and all the value that you're putting out there.
All right. Well, thank you so much. We will talk soon. Thank you, everybody, for listening in on today's Brand Clarity episode with Susie Liberatore. 2 things. First and foremost, please, if you liked this episode, please subscribe and leave some positive reviews. Also, don't forget to sign up for Stop Sending Your Customers to the Competition and get my insider secrets to compelling branding that converts. You can find that at branding-bridge.com. It's a free workbook for you to check out right now. All of the branding techniques and strategies that I use for my paying clients.